tonight we embark on a subject so riveting, so pulse-pounding, that historians often struggled to stay awake long enough to write about it. Medieval taxes. Yes, the fees, fines, tolls and tithes that kept lords wealthy, peasants broke, and everyone just slightly annoyed. Forget knights, castles and epic battles. This is the real medieval experience, paying extra for the privilege of existing. You'll learn how peasants were charged for using ovens, how light itself could be taxed through windows, and why having too many doors was considered a financial liability. Over the next 2 hours, we'll take you on a calm, painstakingly detailed journey through every tax nobody asked for. It will be long, it will be dry, and if we're lucky, it will bore you to sleep before you ever make it to the beard tax. So settle in, relax, and prepare yourself for what might be the most exhaustive and exhausting account of medieval taxation ever recorded. After the fall of the Roman Empire, Europe was left with scattered kingdoms, wandering armies, and a general lack of anyone keeping proper track of things. Out of this confusion emerged the feudal system, which can best be described as a pyramid scheme with better castles. At the top sat the king. Beneath him, nobles. Beneath them, lesser lords. And at the very bottom, peasants, who did the actual work and paid for the privilege of doing it. The arrangement was simple. The king handed out land to nobles in exchange for loyalty. Nobles divided their land among knights, who promised military service, and peasants, they got mud, wolves, and the chance to give most of what they produced to someone who already had plenty. In theory, this was called protection. In practice, it was a subscription plan, where you never saw the benefits but were billed regularly. Taxes in these early centuries were rarely collected in money. Instead, peasants handed over grain, livestock, or whatever else they happened to have left after surviving the harvest. Chickens were popular, though less so for the chickens, and bundles of firewood also made frequent appearances. The system worked, but it had drawbacks. A lord could not easily march into battle with a sack of root vegetables, and storing 12 goats in the treasury raised obvious logistical issues. The solution was money. Unlike goats, coins did not wander into the neighbor's field. Unlike grain, coins did not rot in storage. And unlike chickens, coins did not make noise while the lord was trying to sleep. Once rulers discovered that peasants could be persuaded to trade goods for coins and then hand over the coins anyway, the future of taxation was secured. With coinage, the possibilities expanded dramatically. Lords began charging for access to the village mill, for crossing bridges, and for baking bread in communal ovens. One might imagine that bread, being a basic necessity, would have been exempt. But medieval logic dictated that the more essential something was, the more urgently it deserved a fee. Complaining about these charges was, of course, an option. It just wasn't a very safe one. By the time this system matured, nearly every activity carried some form of levy. Living in a medieval village was less about community life and more about carefully funding it. If you were alive, you were taxable. If you were dead, you were still taxable, though the paperwork was simpler. And if the lords had not already claimed enough, the church soon realized it could step in. After all, if salvation was valuable, surely it warranted at least 10% of everything you owned. Thus appeared the tithe, proof that holiness too could be itemized. Having established that lords could tax nearly every aspect of daily life, it was inevitable that the church would step in to claim its portion as well. After all, if eternal salvation was on the table, surely it warranted a service fee. This fee was known as the tithe, a tax so universal and so enduring that peasants could expect to pay it regardless of how many other levies had already hollowed out their pockets. The tithe was, in theory, simple: 1/10 of everything, 1/10 of your grain, 1/10 of your livestock, 1/10 of your income, provided you had any. Even if you didn't, you were still expected to produce something. Starving. Then perhaps you could offer labor, or maybe 1/10 of your patience, though the latter was difficult to measure accurately. Payment was usually collected in kind. This meant carts of hay, barrels of grain, or the occasional sheep were deposited at the church, which soon resembled less a house of God and more a particularly pious barn. In some villages, priests found themselves managing what amounted to small farms, which they then used to fund church construction, pay clergy, or simply demonstrate that the Lord rewarded those who counted carefully. The tithe was not, as one might expect, optional. Failure to contribute could result in fines, public shaming, or the kind of divine disapproval that seems suspiciously indistinguishable from the disapproval of the local priest. In practice, refusal usually ended with the same outcome. The tax was paid, and the peasant in question was a little hungrier, though presumably still destined for heaven. The brilliance of the tithe lay in its consistency. Lords might invent new taxes when they ran short on funds, but the church didn't need to improvise. The tithe was steady, predictable, and backed by the full weight of religious authority. If anyone questioned the fairness of it, the answer was reassuringly final. God wanted 10%, and God, inconveniently, did not negotiate. Of course, collection of the tithe varied by region. In some areas, professional tithe collectors went door to door, making notes, weighing sacks of grain, and offering the kind of customer service experience one might expect from a medieval debt collector. Elsewhere, peasants brought their contributions directly to the church. This often involved balancing awkward amounts of produce on carts, only to watch them disappear into storage, never to be seen again. It was taxation disguised as a charitable act, which is perhaps the most efficient form of taxation ever invented. Over time, disputes inevitably arose. Did 1/10 mean 1/10 of gross or 1/10 of net? Could you deduct the chickens that died unexpectedly? What about a field ruined by weather? Clergy usually resolved such questions in the simplest way possible, by reminding peasants that God's math was always, coincidentally, in the church's favor. The tithe endured for centuries, shaping not only local economies, but also the architecture of Europe. Cathedrals did not spring from the ground by divine will alone. They were built on the steady accumulation of other people's grain, and while peasants might have grumbled, they also knew there was no escaping it. You could avoid the mill, you might even avoid the bridge toll, but no one escaped the tithe. And if the church was claiming 10% of everything, lords were hardly going to be left out. Which leads us to another particularly creative method of revenue, the hearth tax, where even the simple act of staying warm came with a bill. If the tithe proved that God required 10%, the hearth tax proved that kings required everything else, including the very air you breathed indoors. Instituted in various forms across medieval Europe, the hearth tax was one of the most ingenious ways of charging people for simply existing in their own homes. It worked on the principle that every family needed fire, and if you needed it, you could be billed for it. The tax was levied per hearth or fireplace. In practice, this meant the larger your home, the more you paid, since every additional hearth was treated as an additional luxury. To the tax collector, a hearth was not a necessity for cooking or surviving winter. It was a lifestyle choice, and lifestyle choices, naturally, came at a premium. Assessments were straightforward. Officials, armed with a rough list of households, would wander through villages to count hearths. In some regions, this meant a quick look inside the house. In others, it meant standing outside and counting chimneys, which was efficient, though not always accurate. Families occasionally bricked up hearths to avoid detection, resulting in homes that were marginally colder, but financially more responsible. The hearth tax also created subtle divisions within communities. Wealthier households with multiple fireplaces not only paid more, but often flaunted their ability to do so. Nothing demonstrated social status quite like having enough disposable income to heat both your kitchen and your sitting room. For peasants huddled around a single smoky fire, this display was as warming as it was irritating. Practical challenges abounded. What counted as a hearth? Did a cooking pit qualify? Was a portable brazier taxable, or could it be considered a clever loophole? Tax officials often ruled in whatever way produced the most revenue. If it generated heat, it was taxable, and if it didn't generate heat, they might tax it anyway, just in case. The hearth tax also encouraged architectural creativity of the least inspiring kind. Some families built elaborate flues to make multiple rooms appear to share a single hearth, creating the medieval equivalent of a tax shelter. Others went without entirely, which saved money but shortened lifespans. In the balance between comfort and thrift, many peasants simply froze, though at least they did so without additional financial burden. The long-term effect of the hearth tax was predictable. People complained, officials ignored them, and rulers enjoyed the steady flow of income. As with most medieval taxes, it was less about fairness and more about proving that rulers had thought of everything. By the time the hearth was being taxed, peasants understood that nothing in daily life was sacred. If heat could be monetized, surely light was next. Which of course brings us directly to the window tax, a system so effective at discouraging home improvement that medieval architecture became dimmer almost overnight. If the hearth tax put a price on warmth, the window tax put a price on daylight. The idea was simple. The more windows you had, the more money you clearly possessed, and therefore, the more you could afford to hand over. It was a tax on architecture, sunlight, and in some cases, basic ventilation. The logic seemed flawless to the collectors. Large houses had more windows. More windows meant wealth. Therefore, more windows deserved higher taxation. What this overlooked was the fact that peasants also required windows, not to demonstrate prosperity, but to avoid suffocating in complete darkness. For the poor, a window was not a luxury feature. It was the only thing standing between a smoky interior and permanent lung damage. Still, officials were unmoved. A window was an opening, and an opening was taxable. This led to some unfortunate consequences for medieval building design. Households with modest incomes began bricking up windows to reduce tax liability, leaving their homes dim and airless. In extreme cases, families reduced their windows to such tiny slits that their interiors resembled caves. It was not unusual to find peasants straining to read by the faintest shaft of light, no doubt reflecting on how darkness was at least free. The window tax also provided a handy visual guide to class divisions. Wealthier homes continued to flaunt multiple windows, basking in light and the smug knowledge that they could afford it. Meanwhile, poorer households gave the impression of fortresses under siege, their windows sealed in stone. Entire villages began to resemble prisons, though to be fair, life in them wasn't far off. As with the hearth tax, disputes arose. Was a hole covered in oiled parchment still a window? What about a skylight? Could one large window divided into panes count as several? Tax officials usually answered these questions with an impressive lack of imagination. If you could see through it, breathe through it, or complain about the draft, it was taxable. Perhaps the strangest feature of the window tax was how effective it was in stifling architectural progress. Builders, rather than designing homes with comfort in mind, now designed with tax codes in mind. Natural light became a financial liability, and families learned to appreciate the benefits of gloom. The age of innovation, it turned out, could be delayed indefinitely if you taxed the view. And yet, while windows were important, they were not the only points of access to a household. If light could be charged, so could movement. Which leads us, with dull inevitability, to the next ingenious scheme. Bridge tolls, where simply crossing from one side to the other became an exercise in economic planning. If windows put a price on light, bridges put a price on movement. The bridge toll was one of the simplest and most irritating taxes of the medieval period, a fee for the privilege of crossing from one bank of a river to the other. In a time when bridges were rare, valuable, and occasionally safe, charging for their use seemed perfectly reasonable to those who built them, or more accurately, to those who ordered someone else to build them. The toll was usually justified as a maintenance fee. Bridges, after all, required upkeep. Wooden planks rotted, stones shifted, and the occasional Viking raid had a way of leaving structures in less than ideal condition. By paying the toll, travellers were supposedly contributing to the preservation of public infrastructure. In reality, the money often went directly into the pockets of the local lord, who maintained the bridge in the same way he maintained his peasants, minimally. Rates varied by location and by traveller. Merchants with wagons paid more than peasants on foot. Livestock paid too in their own way. A cow could incur a separate fee, sometimes charged per hoof. Horses, donkeys, and even geese were tallied and taxed. Crossing a bridge could quickly become a math problem, with the solution always being more expensive than expected. For villagers, this presented a dilemma. One could pay the toll and reach the market, or one could attempt to ford the river. The second option was cheaper, but frequently fatal, which gave the toll a rather persuasive edge. Some peasants even preferred swimming livestock across, which generally resulted in the loss of both the animals and any lingering optimism. Toll collectors themselves developed a reputation for persistence. Stationed at either end of a bridge, they ensured no one crossed without payment. Attempts at evasion were met with swift consequences, ranging from fines to the medieval equivalent of being put on a do not cross list. Few things were more humiliating than being turned back at a bridge while one's neighbours looked on, particularly when those neighbours were also carrying your vegetables. Bridge tolls were resented, but they endured for centuries because they were practical, easy to enforce, and profitable. A lord might struggle to tax every sack of grain produced in his domain, but he could easily station 2 men by a bridge and watch the coins roll in. It was medieval economics at its finest. Take something essential, place yourself in the middle, and charge everyone who passes. Of course, food that crossed bridges also required preservation, which brings us to one of the most lucrative and irritating levies of all, the salt tax, a scheme that managed to turn the blandest of seasonings into a steady stream of income. If bridge tolls put a price on movement, the salt tax put a price on survival itself. Salt in the medieval world was not simply a seasoning. It was essential for preserving food, curing meat, and making sure your winter diet did not consist entirely of regret. By taxing salt, rulers discovered they could collect money not just from merchants or landowners, but from absolutely everyone, because everyone needed salt. The system was simple. Salt was produced in certain regions, transported to markets, and then taxed at nearly every stage. There were levies on its production, levies on its sale, and sometimes levies on the levies themselves. By the time it reached the table, a pinch of salt carried the financial weight of a small goat. In some regions, this became so burdensome that people resorted to elaborate strategies to avoid the tax, including smuggling. Salt smuggling sounds almost glamorous, but in reality, it involved trudging through marshes at night with heavy sacks, praying you didn't sneeze and give yourself away. Collectors took their duties seriously. Salt inspectors monitored trade routes and markets, ensuring that every grain was accounted for. Travelers caught with untaxed salt faced fines or confiscation, which meant watching your hard-earned seasoning redistributed to someone with better connections. The punishment may sound petty, but when salt was the difference between meat that kept through winter and meat that smelled like despair, it carried real consequences. The tax also revealed social divisions with crystalline clarity. Wealthier households could afford the inflated prices, seasoning their meals liberally, while poorer families stretched their supplies as far as possible. This created a culinary hierarchy where salt became not just a preservative, but a subtle status symbol. If your stew tasted less like stew and more like boiled sadness, it was a reminder that taxation had found its way into your dinner bowl. The brilliance of the salt tax was its universality. Everyone needed it, no one could truly avoid it, and attempts at resistance only highlighted its effectiveness. Smugglers risked punishment, peasants grumbled, and rulers quietly grew richer. It was, in short, a model tax, irritating, necessary, and impossible to escape. And yet, as oppressive as it was, the salt tax was only one example of how rulers could monetize daily necessities. If salt could be taxed, so too could the very act of making bread, which leads us directly to the next great invention in creative taxation, the mill tax, where grinding your own grain was somehow considered a privilege worth paying for. If the salt tax proved that flavor could be monetized, the mill tax proved that even the act of turning grain into flour was not safe from official attention. Medieval lords quickly realized that peasants needed flour for bread, and bread was not optional. This made mills the perfect choke point for revenue. Everyone needed them. They were easy to monitor, and most importantly, they were too large to sneak into a backpack. The system was straightforward. Lords owned the mills, or at the very least claimed exclusive rights to them. Peasants were forbidden from grinding their own grain at home. Instead, they had to haul their harvest to the lord's mill, wait their turn, and pay a fee for the privilege of watching someone else do the grinding. The fee was often taken directly in flour, a percentage skimmed off the top leaving peasants with slightly less bread and slightly more resentment. Naturally, attempts were made to avoid the mill tax. Families tried to grind grain at home with hand querns, small stone tools that did the job perfectly well. Unfortunately, this was illegal in many places, and lords treated secret querns with the same suspicion modern governments reserve for unregistered printing presses. Officials would search homes, confiscate querns, and in some cases, destroy them publicly, as though crushing a peasant's personal millstone was a thrilling demonstration of justice. The mill itself was often a place of frustration. Long queues, broken machinery, and uneven grinding were common. Peasants complained of waiting hours, only to receive flour so coarse it could double as gravel. Yet they had no choice. To avoid the lord's mill was to risk fines or punishment. It was less an economic system and more an enforced exercise in patience. As with other taxes, the mill fee revealed social hierarchies. Wealthier farmers could send larger quantities, absorbing the loss as an unfortunate cost of business. Poorer families, by contrast, watched their already meagre grain supplies shaved down even further. Bread may have been the staff of life, but under the mill tax, it was a rather short staff and often splintered. Still, the mill tax endured because it was simple, profitable, and easy to enforce. Lords liked profits, peasants disliked freezing and starving, and so the arrangement continued. And while mills turned grain into flour, lords turned peasants into reliable sources of income. But bread was not the only part of daily life subject to creative taxation. If you thought marriage was a sacred union, free from worldly concerns, you would be mistaken. The next great levy took aim at love itself, the marriage fee, where even saying "I do" came with a receipt. If the mill tax made sure your bread wasn't free, the marriage fee made sure your wedding wasn't either. In the medieval world, love might have been blind, but it certainly wasn't tax exempt. Lords quickly realized that peasants would continue to marry regardless of famine, plague, or bad haircuts, which made matrimony a dependable source of income. The principle was straightforward. When a couple decided to marry, they paid a fee to their lord. This was sometimes described as a kind of license, as if two people who had spent their entire lives within the same muddy village required official permission to spend even more time together. In practice, it was less about permission and more about revenue. The lord did not care whether the marriage was happy, only that it was profitable. Marriage fees varied. In some regions, peasants paid a flat rate. In others, the fee scaled with circumstance. Widows who remarried often paid more, partly because their property and dowry made them valuable assets, and partly because taxing widows was apparently considered good sport. Occasionally, the fee was waived if the marriage involved particularly strategic arrangements, though the lord usually found another reason to collect payment elsewhere. The fee also reinforced social hierarchy. Wealthier families could afford elaborate weddings with banquets, musicians, and plenty of bread, already taxed, of course, while poorer couples celebrated with little more than a candle and a loaf. Both, however, owed the same basic fee, because in the eyes of taxation, love was remarkably egalitarian. Inevitably, attempts at avoidance appeared. Some couples tried to marry in secret without paying the fee. Unfortunately, medieval villages were small, and the sudden appearance of a new household was rather difficult to conceal. Lords noticed, fees were enforced, and the only thing secret marriages accomplished was adding fines to the bill. The church, unsurprisingly, also benefited. Certain ceremonies required additional offerings, which turned weddings into a kind of joint venture between spiritual and secular taxation. Between the Lord's fee and the priest's demands, a peasant might begin married life with fewer coins and considerably less enthusiasm. Yet the system persisted, because unlike mills or bridges, marriage was deeply personal and impossible to avoid. People continued to wed, lords continued to collect, and the cycle went on. Even in the most joyful of moments, medieval peasants could count on a reminder that happiness came with a surcharge. And while marriage was a tax on union, livestock was a tax on survival. Which brings us neatly to the next levy in our catalogue of medieval creativity, the pig tax, where even the humble farm animal was transformed into a source of revenue. Having already taxed bread, salt, and even marriage, lords eventually turned their attention to livestock. Pigs, being common, noisy, and conveniently easy to count, made excellent candidates for creative taxation. Thus emerged the pig tax, a levy that ensured even your future bacon came with a bill attached. The logic was painfully simple. If a family owned pigs, those pigs represented value. Value could be taxed. Therefore, pigs were taxable. It mattered little whether the animals were fat and healthy or scrawny and uncooperative. A pig was a pig, and every pig represented an opportunity for revenue. Collectors kept careful tallies, strolling through villages with the kind of enthusiasm usually reserved for accountants and butchers. Each squeal in the sty was essentially a small jingling sound in the Lord's purse. The pig tax was sometimes charged per head, with every animal carefully noted. In other cases, it was collected as a flat fee for the right to keep swine at all. Either way, it meant peasants paid twice, once in the cost of feeding their pigs, and again in the privilege of owning them. For families already living close to starvation, this turned pork into an unusually stressful commodity. Avoidance strategies were, of course, attempted. Some peasants tried to hide pigs during inspections, herding them into woods or cellars when tax collectors approached. This worked only occasionally, since pigs are not known for their subtlety. A hidden pig had an inconvenient tendency to grunt loudly at the wrong moment, alerting officials that somewhere nearby was a taxable asset in need of documentation. Another strategy was underreporting litters. A sow might produce a dozen piglets, but a peasant would claim only half that number. The problem was that pigs multiply faster than secrecy allows, and sooner or later, the extra animals made their presence known. The discovery of undeclared pigs often resulted in fines that made the original tax look generous by comparison. For lords, the pig tax was practical. Swine were a vital food source, producing not only meat but also fat, leather and bristles. By taxing pigs, they were effectively taxing a broad range of daily necessities. And unlike grain, which fluctuated with the weather, pigs were relatively stable. A lord could count on his peasants to raise them, and therefore count on his own purse to stay full. In the grand scheme of things, the pig tax was only one piece of a much larger system of animal-related levies. Sheep, for instance, provided wool, and wool, unlike pork, could be exported, traded, and worn. Which brings us to the next item in the medieval tax catalogue, the sheep and wool tax, where the fleece on an animal's back became a highly profitable stream of revenue for centuries. Sheep were the backbone of much of the medieval economy. They provided meat, milk, and most importantly, wool. Wool was so valuable that English kings once described it as the very foundation of their wealth, which is another way of saying they immediately figured out how to tax it. The sheep and wool tax became one of the most profitable levies of the age, turning fluffy animals into walking, bleating bags of revenue. The process was as tedious as it was effective. Peasants paid taxes on the number of sheep they owned, on the wool they sheared, and sometimes again when that wool was sold. In particularly enthusiastic regions, taxes could apply at every stage of the process: raising the sheep, shearing it, spinning the wool, and finally selling the cloth. By the end, it was unclear whether anyone actually profited from sheep other than the collectors. Inspectors kept detailed counts, trudging through fields to tally sheep with the seriousness of men who had never been asked to count anything more complicated than livestock. The animals, of course, were uncooperative. They wandered, bleated, and occasionally trampled the ink pots. Still, the counts went on, because wool was worth too much to leave untaxed. Smuggling was common. Bundles of wool were quietly moved across borders, hidden in wagons under hay, or disguised as something less suspicious, like enormous cushions. Punishments for smuggling were harsh, since rulers guarded the wool trade as fiercely as they guarded their crowns. It was not unheard of for smugglers to lose both their goods and their freedom, which made many peasants reconsider whether an extra bag of fleece was worth the risk. For ordinary families, the sheep and wool tax was yet another reminder that nothing in daily life was safe from monetization. Owning a few animals meant warmth in winter, but it also meant paying fees at every turn. The result was a peculiar situation where peasants froze in houses built of stone, staring at sheep they could not afford to shear. Still, wool remained central to medieval economies, and rulers were not about to let the opportunity slip. The tax persisted for centuries, funding wars, cathedrals, and the occasional royal wardrobe made entirely out of money that used to be sheep. But wool was not the only product peasants turned to for comfort. After trudging through the fields and paying their levies, many sought solace in drink. Which brings us to the ale and beer tax, proof that even the act of dulling your misery came with a surcharge. Few things were more essential to medieval life than ale. It was safer to drink than water, more filling than soup, and provided just enough mild cheer to make endless taxation slightly more bearable. Naturally, this made it a prime target for revenue. The beer and ale tax ensured that even the act of drowning one's sorrows was itself a financial burden. The tax took several forms. In some regions, brewers paid fees for the right to produce ale at all. In others, households brewing their own faced levies based on the size of their barrels. Taverns were taxed on what they sold, inns were taxed on what they served, and travelling merchants were taxed on what they transported. By the end, nearly everyone involved in the process of drinking, from barley farmer to mildly tipsy peasant, contributed in one way or another. Rates varied depending on the enthusiasm of local authorities. Some lords set modest charges, reasoning that peasants would tolerate small losses if it meant continued access to ale. Others demanded more aggressive payments, reasoning, not incorrectly, that peasants would tolerate almost anything for continued access to ale. The result was a steady income stream for rulers, accompanied by a steady hangover for everyone else. As usual, avoidance schemes emerged. Families sometimes brewed in secret, though the smell of fermenting grain was difficult to disguise. Others diluted their ale to claim they had produced less, which technically saved money, but also made for disappointing evenings. A few brave souls tried transporting untaxed barrels across borders, though rolling a full barrel of ale quietly through a forest proved challenging. Many smugglers were caught simply because their contraband sloshed too loudly. The tax also reinforced social differences. Wealthier households could pay the fees and still enjoy decent ale, while poorer villagers watered theirs down to the point that it resembled barley-flavoured disappointment. Taverns became places not only for drinking, but also for displaying who could afford the good stuff. A strong pint became a statement of wealth, while a weak one was a reminder that taxation reached all the way into your cup. Still, the beer and ale tax endured because authorities understood that alcohol was a necessity disguised as a luxury. It could be taxed repeatedly without sparking full rebellion, since most people preferred a weak drink to none at all. In this way, rulers managed to transform leisure into revenue, one pint at a time. But ale was not the only activity that brought people together under the watchful eye of the taxman. Markets, where peasants sold their goods and gossiped about how unfair everything was, also offered lords an irresistible opportunity, which brings us to the market stall fee, the tax on standing in mud with vegetables. Markets were the lifeblood of medieval villages. They were noisy, crowded, and smelled strongly of fish, onions, and whatever livestock happened to wander through. They were also inevitably taxable. Lords quickly realized that peasants would gather in markets whether or not they were convenient, so charging for the right to stand in the mud and shout about turnips became an easy source of revenue. The market stall fee was straightforward. If you wanted to sell goods, you paid for the space to do so. This might be as simple as a patch of ground marked with a rope, or as elaborate as a wooden stall complete with a roof, to keep the rain from diluting your cabbage. Regardless of the setup, the payment went to the lord, who collected money while contributing nothing beyond the occasional muddy footprint. Rates varied by location, but the principle was always the same. More prominent spaces cost more. Sellers with prime spots near the entrance, or the well-paid higher fees, while those relegated to the edge of the market paid less, but also sold less, since few customers were willing to trudge through livestock droppings to buy a wilted leek. The system neatly combined economic exploitation with urban planning, though without the benefit of either efficiency or sanitation. Peasants grumbled, of course. They resented paying simply to stand on dirt that had been free the day before. Some attempted to set up unofficial stalls outside the market boundaries, which usually lasted until guards arrived to dismantle them. The punishment for unauthorized vending could include confiscation of goods, fines, or, most humiliating of all, being forced to eat one's unsold produce as a lesson in obedience. Nothing silenced a rebellious merchant quite like a stomach full of raw onions. The fee also gave lords a visible reminder of their authority. Collectors circulated among stalls, keeping meticulous records of who had paid and who had not. This produced the charming medieval experience of being publicly shamed for unpaid stall fees, while still being expected to haggle politely over carrots. Despite the irritation it caused, the market stall fee endured. It was easy to enforce, predictable in its returns, and a constant reminder that even the most ordinary act, shouting about root vegetables in a crowded square, came at a cost. It was taxation at its most visible, and therefore at its most unavoidable. And if standing in mud was taxable, so too was walking on the road to get there. Which leads us neatly to the next item in our tour of medieval ingenuity, the road tax, where every pothole became an investment opportunity. Travel in the medieval world was rarely pleasant. Roads were muddy in the spring, dusty in the summer, frozen in the winter, and rutted all year round. Still, they were essential. Merchants, pilgrims, and peasants alike had to use them, which meant lords quickly identified them as yet another way to raise funds. Thus, the road tax, a fee for the privilege of trudging along a path that was, at best, slightly less hazardous than the surrounding fields. The road tax was justified as a maintenance measure. Collectors assured travelers that their contributions went directly toward improving road quality. In reality, improvements were rare, and most medieval roads remained in a state that could charitably be described as natural. Potholes were considered standard features, and travelers learned to accept the experience of losing a wheel or a shoe as part of the journey. Payment was often collected at gates or checkpoints, where officials noted who had paid and who had not. Merchants carrying wagons of goods were charged higher rates, on the theory that anyone transporting large amounts of turnips clearly had money to spare. Peasants on foot sometimes escaped with smaller fees, though not always, since even a single basket of onions was apparently worth taxing. Avoidance strategies were limited. Some travelers tried bypassing the roads entirely, trudging through fields or forests. Unfortunately, these alternatives often involved bandits, wolves, or the unpleasant realization that the forest was not, in fact, headed toward your destination. Others attempted to sneak past collectors at night, only to be caught by guards who had been specifically instructed to listen for the sound of squeaky cartwheels in the dark. The result was that most people paid, grumbled, and moved on. Complaints were common, but effective resistance was rare. The road tax persisted because roads were unavoidable, and rulers understood that inevitability was the secret ingredient in all successful taxation. For many, the road tax became a symbol of the wider system, paying for something that was supposed to make life easier, but often made little difference at all. It was an early form of what we might now call infrastructure spending, except without the infrastructure. And while roads connected villages and markets, bridges carried travelers across rivers, and in some places into legend. Which brings us next to one of the most memorable levies of the age, the murky tolls of the Bridge of Bones. Most bridge tolls were routine affairs, a few coins for a wooden span, a little extra if you brought livestock, and perhaps a scowl from the collector if you dared to haggle. But occasionally, tolls achieved such notoriety that they passed into legend. The most famous of these was the so-called Bridge of Bones, a name that made travelers slightly uneasy and tax collectors strangely proud. The story varied from place to place, but the core remained the same. Somewhere in Europe stood a bridge where tolls were so exorbitant that only the wealthy could afford to cross without complaint. Everyone else either paid grudgingly or turned back, muttering about daylight robbery. According to local law, those who couldn't pay were left stranded until they did, and in some particularly grim retellings, their remains added to the bones for which the bridge became known. Whether this was literal or simply metaphorical depended on how imaginative the storyteller was and how many ales he had consumed beforehand. What made the Bridge of Bones so infamous was not just its price, but its symbolism. Travelers already expected to pay tolls. They had, after all, paid at nearly every other crossing in the kingdom. But here the charge was said to be ruinous. sometimes equaling an entire week's wages for a peasant. Merchants cursed it, pilgrims dreaded it, and wandering minstrels turned it into ballads that were only slightly less depressing than the bridge itself. Interestingly, the Bridge of Bones story may have served as a warning as much as entertainment. Tales of ruinous tolls discouraged smugglers and reminded peasants of the dangers of trying to avoid payment. A man who thought twice about sneaking across at night might imagine his skull joining the bridge's collection and decide a few coins was the wiser option. Tax collectors, of course, did nothing to dispel such stories. A frightening reputation was cheaper than hiring more guards. The bridge became a metaphor for the larger problem of medieval life. Every path forward required payment. Whether or not the bones were real, the idea that tolls could grind people down to nothing certainly was. For peasants, it was one more reason to sigh heavily and continue shuffling through their taxed existence. And even if one managed to survive the tolls, there was still no escape from the ultimate levy. For when a peasant's life ended, his obligations did not. Which brings us, with grim inevitability, to the mortuary tax, the final bill delivered after death. Medieval peasants lived their entire lives under the weight of taxation, so it should come as no surprise that death itself did not provide an escape. The mortuary tax, sometimes called the death duty, was the final reminder that nothing in life was free, not even the part where life ended. Lords and clergy reasoned, with impressive creativity, that if a peasant's earthly possessions could no longer be used, they might as well be collected. The process was morbidly efficient. When someone died, a portion of their movable property, livestock, tools, or clothing, was claimed as payment. In some cases, the deceased's best beast was seized, meaning the finest cow or horse became the property of the local church or lord. This made funerals an unusually practical affair. Mourners might grieve, but tax collectors were already measuring the ox. For the church, the mortuary tax was often justified as a spiritual contribution. A soul leaving the world required prayers, services, and the occasional candle, all of which cost money. Peasants, naturally, had little say in the matter. Their families were expected to hand over the goods, ensuring that piety and profit went hand in hand. Whether the deceased appreciated the arrangement was not considered relevant. The tax could be a heavy burden for surviving relatives. Losing a loved one was difficult enough, but losing the family's only cow at the same time made matters worse. A widow might find herself not only grieving, but also without milk for her children, a situation that made heaven seem slightly less comforting. Still, the rules were enforced, and collectors showed little sympathy. A man's best beast was valuable, and value was never allowed to go untaxed. As with many medieval levies, attempts at avoidance emerged. Families sometimes hid their finest animals before death was officially recorded, substituting weaker livestock in the hope that collectors would not notice. This strategy had limited success, since tax officials had a keen eye for quality and a suspicious tendency to arrive very quickly after a death was announced. Some peasants whispered that officials knew of impending deaths before the families did, which suggests either remarkable foresight or a very efficient rumour mill. The mortuary tax also served as a reminder that taxation was eternal, even if life was not. To live meant to pay. To die meant to pay again, or at least to have your belongings redistributed by people who still very much intended to live. It was, in effect, a medieval version of closing out one's account. except the balance was always negative. And yet, as grim as it was, the mortuary tax was not the end of creative levies. Death might have been taxable, but so was firewood, which brings us to the forest tax, a fee for the radical act of keeping warm with sticks that happened to grow nearby. Firewood, in the medieval world, was not a luxury. It was the difference between warmth and frostbite, between hot food and chewing on cold grain. Naturally, this made it an ideal candidate for taxation. Enter the forest tax, a levy placed on the simple act of gathering sticks that had inconveniently fallen from trees. What began as free kindling quickly became a regulated privilege, parcelled out by lords who rarely set foot in the woods themselves. The principle was straightforward. Forests belonged to the king or the local lord. Everything inside, the timber, the animals, even the mushrooms, technically counted as property of the landholder. Peasants could still gather firewood, but only if they paid. Some taxes charged for collecting dead wood, others for cutting branches, and in more imaginative places, fees applied to merely entering the forest with suspiciously large pockets. Officials enforced the rules with a seriousness that suggested trees were as valuable as gold. Peasants caught carrying unauthorized bundles of sticks could face fines, confiscation, or, in extreme cases, corporal punishment. Imagine explaining to your family that you had been whipped not for rebellion or theft, but for gathering twigs. It was a peculiarly medieval problem: illegal firewood. The forest tax also applied to timber for building. A peasant who needed to repair his roof had to request permission, pay a fee, and sometimes wait for weeks, during which time his house continued to leak. In this way, taxation and poor housing were intimately connected. Lords, of course, enjoyed grand halls built from enormous beams, reminding peasants that while wood might be abundant, affordable wood was not. As with other levies, peasants developed strategies to cope. Some collected wood at night, hoping to avoid detection, though dragging branches through a silent forest was not as stealthy as they imagined. Others disguised their bundles with leaves, or claimed they had been found in the village square. None of these strategies worked particularly well, since tax collectors rarely accepted creative excuses. A stick was a stick, and a stick was taxable. The forest tax also created a kind of rural paranoia. Villagers suspected each other of informing on illegal wood gathering, and in some cases, this was true. A peasant who caught his neighbour sneaking logs might report him, partly out of loyalty to the lord, but mostly to reduce competition for scarce resources. Medieval solidarity, it turned out, had a price, and that price was often measured in firewood. Despite the resentment it caused, the forest tax endured. Forests were too valuable to leave untaxed, and rulers were too imaginative to resist charging for something so basic. The arrangement persisted for centuries, turning the natural world into yet another ledger entry. And if sticks could be taxed, so too could the ovens used to burn them. Which brings us directly to the next innovation in fiscal creativity, the oven tax, proof that even the act of baking bread could become a line item in the lord's accounts. Bread was the cornerstone of the medieval diet. Without it, meals were incomplete, stomachs were empty, and peasants were forced to contemplate soup made from little more than hot water and despair. Yet even this daily staple did not escape taxation. The oven tax emerged as one of the more peculiar levies, ensuring that the very act of baking bread, the food that kept people alive, came with an additional cost. The system was simple, if frustrating. Lords or local authorities often maintained communal ovens, large brick structures where villagers came to bake their loaves. Rather than allow every family to own a private oven, a dangerous idea, given both fire hazards and the possibility of lost revenue, peasants were required to use the communal facility, and naturally, they paid for the privilege. Fees were charged per use, with collectors monitoring who brought bread and how many loaves emerged from the flames. Families who tried to sneak in extra dough sometimes faced penalties, and in particularly strict areas, collectors kept ledgers that read more like bakery accounts than tax records. The irony was obvious. Bread was supposed to be the simplest of foods, yet by the time it reached the table, it carried the weight of paperwork. Peasants occasionally attempted to avoid the oven tax by building their own small ovens. This practice was usually outlawed, and officials made a point of destroying unauthorized ovens when they found them. Few things demonstrate the seriousness of medieval taxation quite like a soldier dismantling a clay oven while a family looks on, clutching their uncooked dough. The message was clear. Warmth and food belonged to the Lord first. The oven tax also revealed the subtle hierarchy of village life. Wealthier families might afford multiple baking sessions, filling their homes with the smell of fresh loaves, while poorer households stretched their dough thin, baking less often and eating more sparingly. Bread, which should have been a unifying staple, became a reminder of inequality and of the Lord's unwavering ability to monetize even hunger. Bread, which should have been the most basic part of survival, became yet another reminder that lords could find a way to monetize hunger. The oven tax persisted because it was unavoidable. Peasants could no more live without bread than they could live without air, and rulers knew it. And of course, once bread was being taxed, attention turned upward. The very chimneys that carried smoke out of these ovens soon came under scrutiny. If a family was wealthy enough to funnel smoke neatly into the sky, surely they were wealthy enough to pay for the privilege. Which brings us inevitably to the chimney tax. By the late medieval period, chimneys had become a modest sign of progress. Unlike open hearths, which filled homes with smoke and left families coughing through dinner, chimneys directed fumes neatly outside. This small architectural improvement made life slightly healthier and considerably less smoky. Naturally, it did not take long for rulers to notice and conclude that fresh air indoors should not be free. Thus emerged the chimney tax. The reasoning was simple. Not every house had a chimney. Only households with some degree of wealth could afford them, which made chimneys an easy indicator of taxable prosperity. Collectors walked through villages, counting stacks of brick that poked above the rooftops. Each chimney represented not just an improvement in ventilation, but an opportunity for revenue. Peasants were, unsurprisingly, unimpressed. Chimneys already required construction costs, maintenance, and occasional repairs when storms knocked bricks loose. To add a fee for simply owning one seemed excessive. Yet the rule was enforced, and families soon discovered that even the smoke from their fires could not escape without passing through a toll. Avoidance was tricky. Unlike pigs or grain, chimneys could not be hidden. A stack of bricks jutting into the sky was difficult to conceal, no matter how creative one became. Some households attempted to disguise chimneys by covering them with thatch or paint, but inspectors were not easily fooled. Others simply went without, relying once again on smoky interiors and watery eyes. This created the ironic situation where avoiding taxes meant living in conditions so unpleasant that the savings hardly seemed worthwhile. The chimney tax also contributed to peculiar architectural choices. Some families built larger, shared chimneys that connected multiple hearths, arguing that one massive stack should count as a single unit. Officials disagreed, often ruling that each opening in the chimney still counted separately. In this way, the chimney tax became less about architecture and more about interpretation, with lords predictably favouring whichever interpretation produced more money. Despite its unpopularity, the tax endured for the same reason most others did. It was easy to enforce and difficult to avoid. As long as chimneys were visible above rooftops, they were visible to collectors. It was, in many ways, a perfect symbol of medieval taxation, turning an improvement in quality of life into a financial liability. And if chimneys could be charged, then arbitrary demands required no excuse at all, which leads us directly to the tallage tax, a levy collected not on goods, services, or architecture, but on the simple authority of the Lord to say, "Because I said so." By this point, peasants had been taxed for bread, salt, firewood, chimneys, and nearly every other aspect of survival. Yet lords, never ones to leave money uncollected, decided that specific reasons were unnecessary. Thus emerged the tallage tax, a levy imposed not on a product, a service, or even a visible chimney, but on the simple principle of, because the Lord said so. Tallage was the purest form of taxation, unencumbered by logic. Unlike the hearth tax or the mill fee, it required no justification. The Lord announced that money was needed, perhaps for a feast, perhaps for a castle repair, or perhaps simply because the treasury looked a little light. Villagers then paid. There was no debate, no negotiation, and no appeal. It was medieval authority in its most efficient form, arbitrary and absolute. Collectors often arrived with little notice, demanding a sum calculated by means that were rarely explained. Sometimes tallage was assessed on entire villages, leaving the community to divide the burden among themselves. This led to long, miserable discussions about who owed what, often ending with the poorest families shouldering more than their share. Lords, of course, were indifferent to such details, provided the full amount arrived promptly. Attempts at avoidance were limited. Unlike other taxes, where peasants might hide livestock or underreport grain, tallage had no fixed base to conceal. There was nothing to hide because there was no formula. The Lord simply demanded payment and peasants complied. Resistance was possible, but the consequences were severe. Refusal could mean confiscation of property, imprisonment, or worse. Few peasants were willing to risk it, since tallage collectors rarely travelled without a contingent of armed men eager to demonstrate the importance of compliance. The psychological effect was as significant as the financial one. Tallage reminded peasants that they lived at the mercy of authority, and that authority required no excuse to act. Even the illusion of fairness, present however faintly in the hearth or mill tax, was absent here. Tallage was pure feudal power, boiled down to its essence. It was, in short, taxation as philosophy. You pay because I can make you. Naturally, this kind of levy bred resentment. Stories circulated of lords demanding tallage for increasingly absurd reasons, to fund hunting trips, to host visiting dignitaries, or to replace the lord's favourite horse. Whether true or exaggerated, the stories captured the fundamental truth. Tallage was limited only by imagination, and unfortunately, Medieval lords were often quite imaginative when it came to money. And yet, even arbitrary taxation eventually found a way to connect back to military obligations. For while tallage proved that peasants paid simply because they could be forced to, another levy offered at least the illusion of choice. This was the knight's fee, where a peasant or landholder could avoid military service by paying instead, essentially putting a price tag on not dying in battle. Military service was one of the cornerstones of the feudal system. In theory, landholders were obligated to provide knights to their lords when called to war. In practice, many preferred not to risk being skewered by a lance on some distant battlefield. The solution was the knight's fee, a payment that allowed one to avoid actually performing the duty one was supposed to perform. It was, in essence, a tax on cowardice, though the official term was commutation. The arrangement worked like this. A vassal owed his lord a certain number of days of knight service each year. Instead of showing up in armor, he could pay a fixed sum of money. The lord then used this money to hire mercenaries, who were generally more enthusiastic about fighting because they were being paid directly and, unlike reluctant vassals, didn't spend the whole campaign trying to go home early. The system was remarkably efficient. The lord got soldiers, the vassal got safety, and the mercenary got beer money. For peasants, however, the costs often trickled down. A landholder who paid the knight's fee still needed funds, and those funds came from rents and levies on the people working his fields. Thus, peasants indirectly financed armies in which they had no interest. They paid to avoid wars they weren't fighting, then paid again when the mercenaries hired with their money marched across their crops. The knight's fee also highlighted the flexible morality of feudal obligations. Knights were meant to embody honor and service, but in reality, their obligations were negotiable in coin. It was a system where valor could be outsourced, provided the paperwork was in order. Some chroniclers even suggested that the rise of mercenary armies was fueled almost entirely by the knight's fee, which turned military service into yet another item on the medieval menu of taxes. Naturally, the fee varied in size. Wealthier vassals could pay comfortably, while poorer ones struggled, often leading to additional taxes on their peasants to cover the cost. This meant that peasants might find themselves funding wars not because they wanted to, but because their lord had no desire to ruin a perfectly good suit of armor. Still, the knight's fee had its advantages for rulers. It provided steady revenue and a more professional army, even if that army's loyalty was as strong as its last paycheck. It also demonstrated the continuing creativity of medieval taxation. Even obligations of blood and honor could be translated into financial terms. And yet even this was not the end of the matter. For if knights could buy their way out of service, so too could ordinary landholders and peasants. This gave rise to a related levy, scutage, which extended the principle of paying instead of fighting to a much broader audience. If the knight's fee was a way for noblemen to avoid combat, scutage expanded the courtesy to almost everyone else. The term comes from the Latin scutum, meaning shield, though ironically, the entire point of the tax was to avoid using one. Scutage was, in essence, a shield money payment. Instead of showing up for military service, you handed over cash and stayed home. It was a medieval version of buying your way out of gym class, except the consequences of participation were considerably more fatal. The system worked neatly for rulers. Rather than trying to organize a reluctant, undertrained army of landholders who would rather be tending to their estates, kings collected scutage and hired mercenaries. These professionals were generally more effective, at least until payday was delayed, at which point their loyalty evaporated with suspicious speed. Still, on balance, kings preferred men who fought for money over men who fought while complaining loudly about their fields of cabbages. For landholders, scutage was a mixed blessing. Paying it meant avoiding the mud, blood, and general inconvenience of war. On the other hand, it could be expensive, and the burden often cascaded downward. Lords recouped their costs by squeezing their tenants harder, meaning peasants once again paid for wars they neither started nor particularly cared about. This pattern became so common that peasants might reasonably assume that every conflict, no matter how distant, would eventually result in them eating less bread. Avoidance of scutage was almost impossible. Unlike grain levies or livestock counts, there was nothing physical to hide. Either you paid or you marched, and most chose to pay. Those who didn't often discovered that marching was considerably less romantic than troubadours suggested, involving long walks, poor food, and the occasional arrow. Scutage, by comparison, seemed like a bargain. The popularity of the tax grew to the point that it became a reliable royal income. Kings used it not just for mercenary wages but for broader expenses, such as castle construction or, in less disciplined reigns, personal luxuries. One monarch famously increased scutage rates so often that chroniclers began referring to him less as a warrior and more as a bookkeeper with a crown. The irony of scutage was that it turned the supposedly noble duty of military service into a purely financial transaction. Honor, loyalty, and bravery could all be neatly itemized on a balance sheet, provided the numbers added up. It was a transformation that made perfect sense to rulers and perfect nonsense to peasants, who once again found themselves footing the bill for someone else's decision to stay home. And if scutage allowed men to avoid fighting at home, another tax soon allowed them to avoid fighting abroad. For wars in distant lands, under the banner of religion rather than feudal duty, rulers discovered the crusade tax, a levy that turned salvation itself into an invoice. Medieval rulers were nothing if not ambitious. Local wars and feudal quarrels were one thing, but every so often the call went out for something grander, a crusade. These holy expeditions promised salvation, honor, and the exciting opportunity to march thousands of miles in heavy armor. Unsurprisingly, enthusiasm was often limited. Many peasants had little interest in leaving their fields to fight in deserts they had never heard of. Kings, however, still needed money, and so the crusade tax was born. The logic was flawless from the perspective of rulers and clergy. If salvation was priceless, then surely it could still have a price. The crusade tax provided funds to equip armies, transport supplies, and purchase all the banners and crosses necessary to make a campaign look suitably holy. It was presented as a moral obligation. Support the crusade, and you shared in the glory without ever leaving home. For peasants, this translated as paying for someone else's pilgrimage, essentially the medieval equivalent of crowdfunding. The tax was collected with the usual vigor. Church officials reminded villagers that failure to contribute could be interpreted as a lack of piety, which was never a comfortable position to be in. Lords emphasized loyalty to the cause, though they often pocketed a share of the funds along the way. The result was a steady stream of coin that flowed toward royal treasuries and papal coffers, while peasants continued to live in houses that leaked when it rained. Not everyone accepted the arrangement quietly. Some argued that if crusades were truly holy, God might consider funding them directly. Others pointed out that the men who went on crusade usually returned poorer, hungrier, and occasionally missing limbs, which made the entire enterprise seem less appealing. Unfortunately, these arguments carried little weight, since the only opinion that mattered was the one holding the collection plate. Avoidance of the crusade tax was difficult, though creative strategies existed. Some peasants claimed poverty so extreme that they could barely feed their families, which was usually true but rarely persuasive. Others tried disguising payments as donations for local churches, though officials eventually caught on to the scheme. In the end, most simply paid, reasoning that it was easier to part with a few coins than to explain to an inquisitive priest why one was unwilling to help liberate Jerusalem. The crusade tax highlighted the strange intersection of faith and finance. It turned spiritual zeal into a budget line, sanctity into coin, and war into something that could be funded by the very people least likely to benefit from it. For kings, it was a triumph of creativity. For peasants, it was yet another example of how every path, even to heaven, had a toll booth. And yet, as burdensome as the crusade tax was, it still had at least the veneer of religious purpose. The next levy stripped away even that thin layer of justification. This was the poll tax, a fee for simply existing, which meant peasants could finally be charged, not just for what they did, but for who they were. By now, peasants had grown used to being taxed for nearly everything they owned, grew, or did. Still, authorities managed to push the concept further with the poll tax, a levy that stripped away all pretense of justification. It was not tied to land, animals, ovens, or chimneys. It was a tax on existence itself, a fee for the simple act of being alive. The principle was brutally simple. Each person owed a fixed amount, regardless of their means. Wealthy merchants and destitute peasants paid the same, which technically made the poll tax egalitarian. In practice, of course, it punished the poor far more than the rich. A single coin to a noble was pocket change. The same coin to a peasant might mean the difference between bread and going hungry. The result was a system that looked fair on paper and felt cruel in reality. Collection was methodical. Officials went door to door, counting heads and noting names. Infants, widows, and the elderly were not exempt. If you could be tallied, you could be taxed. The term poll here referred not to voting, something peasants had no experience with, but to head. Every head was counted, every head was billed. Families with many children often suffered the most, discovering that their blessings multiplied not only joy but invoices. Avoidance was challenging. Some tried to hide relatives during head counts, which produced absurd scenes of grown men crouched behind barrels or elderly grandmothers squeezed into cupboards. Inevitably, someone sneezed or coughed, and the ruse was exposed. Others attempted to argue for exemptions on the grounds of poverty, but officials generally found this unconvincing, since poverty was universal and therefore not considered a special case. The poll tax became notorious because of its unpopularity and its tendency to spark unrest. In England, one infamous version contributed directly to the Peasants' Revolt of 1381. Ordinary people, pushed beyond endurance, rose in open rebellion, proving that while taxation was eternal, patience was not. The revolt failed, as most peasant revolts did, but it left a lasting impression. If you tax people simply for existing, eventually they will object, sometimes with pitchforks. For rulers, the poll tax was both brilliant and dangerous. It guaranteed revenue because everyone had to pay, but it also highlighted the fragility of a system built entirely on coercion. For peasants, it was a bleak reminder that there was no escaping obligations. To live was to pay. To die was also to pay, as the mortuary tax had already demonstrated. Existence itself had been fully monetized. And yet, as if taxing heads was not intrusive enough, some rulers found ways to make taxation even more personal. The next levy targeted not just the body, but a very specific part of it, facial hair. Which brings us to the beard tax, a fee that made grooming a matter of financial strategy. Among the stranger levies of the medieval and early modern world was the beard tax, a fee placed on the simple act of letting hair grow on one's face. By the time this idea reached full bloom, subjects were already used to paying for their chimneys, their ovens, and their very existence. Why not then pay for their whiskers? The logic was occasionally dressed up in fashion. Beards, rulers argued, were either unfashionable and therefore needed discouragement, or fashionable and therefore could be monetized. In both cases, the result was the same: a tax collector standing uncomfortably close, deciding whether your chin stubble represented taxable revenue. Collection methods varied. Some places required a flat annual fee, granting men the legal right to grow beards without harassment. Elsewhere, inspectors determined charges by size or style, turning facial hair into a sliding scale of expense. A light stubble might escape attention, but a long flowing beard was essentially a billboard advertising your willingness to pay. Enforcement, predictably, was inconsistent. Some men shaved regularly to avoid the tax, leading to unusually smooth faces across the lower classes. Others attempted half measures, growing short moustaches and insisting these did not count, or trimming their beards so aggressively that they resembled hedges maintained with blunt tools. Arguments broke out between peasants and officials about what technically qualified as a beard. Was a few days of growth taxable? What about sideburns? Collectors usually settled such debates in the simplest possible way, by declaring all of it taxable. The social consequences were curious. Wealthier men often paid with ease, turning their beards into visible proof of both masculinity and disposable income. Poorer men, unable to afford the fee, kept their faces clean, creating a peculiar hierarchy where hair became a financial status symbol. In some communities, the beard tax achieved what no barber could: a generation of reluctant, smooth faces. It was, in short, taxation at its most absurd and its most revealing. By charging for something that grew naturally, rulers proved there were no boundaries left. Anything visible, anything measurable, anything even remotely distinctive could be transformed into income. A beard was not just hair, it was an invoice sprouting from your chin. And if taxing beards seemed invasive, the next levy was far more brutal. For when lords or kings found themselves captured in war, it was not they who paid the ransom, but their subjects. Thus came the ransom tax, a fee that forced peasants to buy back their rulers, whether they wanted them returned or not. Few things highlighted the odd priorities of medieval society quite like the ransom tax. When a lord or even a king was captured in battle, the cost of securing his release did not fall on his family or his fellow nobles. Instead, it was pushed down to the peasants, who suddenly discovered that they were responsible for buying back the very man who had been taxing them in the first place. The arrangement was always presented as a matter of loyalty. "Your lord protects you," officials would explain, "so surely you must help restore him." What went unmentioned was that the lord's capture usually had little to do with the peasants, and that his protection had been of limited value in the first place. Nevertheless, villages were required to contribute, and collectors went door to door demanding coins, grain, or livestock. In some cases, entire communities pooled resources to raise a ransom so staggering that it rivaled their annual harvest. The most famous example came in 1192, when Richard the Lionheart was captured during his return from the Crusades. The ransom demanded was enormous, and while nobles contributed, the burden also fell heavily on ordinary subjects. To pay, new taxes were levied, old taxes were increased, and peasants found themselves financing the release of a king they would never meet. It was perhaps the least satisfying fundraiser in history. Avoidance of the ransom tax was nearly impossible. Unlike other levies, it was framed as a moral duty as much as a financial one. Refusing to contribute risked not only punishment, but accusations of disloyalty or even treason. A peasant who hesitated too long at the doorway might be reminded that his freedom, too, could easily become negotiable. The safest course of action was to hand over what was asked and hope the Lord returned quickly enough not to invent new taxes upon his arrival. For peasants, the experience was galling. They watched resources leave their villages not to improve roads, mills, or even churches, but to liberate a man whose chief skill had been losing battles at inconvenient moments. Worse still, once ransomed, many lords treated the entire episode as a temporary setback rather than a humiliation, and promptly resumed taxing their subjects as though nothing had happened. In some cases, they even raised new levies to replenish the treasury after paying the ransom, meaning peasants effectively paid twice. The ransom tax demonstrated the flexibility of medieval taxation. It was not limited to food, goods, or services, but extended to emergencies, provided the emergencies were those of the ruling class. For peasants, it was a reminder that loyalty was less a noble virtue and more a compulsory payment plan. And if funding a lord's freedom seemed unfair, worse was yet to come. For even those who lived nowhere near the sea soon discovered that they were expected to finance naval expeditions. This was the infamous ship money levy, a tax that required inland farmers, many of whom had never seen an ocean, to help pay for ships they would never use. Among the more baffling of medieval and early modern taxes was ship money, a levy that required subjects, even those living miles from the nearest coastline, to help pay for the construction and upkeep of warships. At its core, the tax was simple. The kingdom needed a navy, and everyone, including shepherds on remote hillsides who had never seen more water than what fit in a bucket, was expected to contribute. Originally, ship money was a duty imposed on coastal towns. These communities, after all, directly benefited from naval protection against pirates and foreign raiders. Over time, however, kings realized that ships were expensive and that peasants inland were conveniently unable to argue from experience. A farmer who had never seen the sea was unlikely to protest convincingly that his cabbages did not, in fact, require maritime defense. And so the tax spread, flowing steadily from villages to royal shipyards. Collection was handled with the usual bureaucratic enthusiasm. Officials tallied what each community owed, and households paid in coin, goods, or labor. For peasants, the logic was unconvincing. They were told that the levy defended the kingdom as a whole, but the connection between ploughing fields and protecting ships was tenuous at best. The average villager might reasonably wonder why his chickens needed naval escorts. Avoidance was predictably rare. Refusing to pay was treated as disloyalty, and in some reigns, treason. While salt smugglers could at least hide their goods, and pig owners could attempt to conceal livestock, no one could plausibly hide the absence of a ship in a kingdom's navy. The levy was abstract, but enforcement was painfully concrete. The absurdity of ship money lay in its universality. Even communities whose closest body of water was a muddy pond contributed to fleets they would never see. The tax highlighted the disconnect between rulers and ruled, as kings pursued naval power, while peasants struggled to repair leaky roofs. Yet it endured because navies were expensive, rulers liked expensive things, and peasants, as always, were considered infinitely taxable. In hindsight, the ship money levy was less about ships and more about precedent. If kings could justify charging inland farmers for navies, they could justify nearly anything. The logic was elastic, stretching as far as the treasury required. And if seas could be funded by distant peasants, then so could the monumental churches rising across Europe. Which brings us next to the church-building funds, a tax that transformed villagers' coins and cabbages into soaring cathedrals they would never set foot in. If peasants thought their contributions to the tithe were enough to keep the church satisfied, they were quickly disabused of that notion when the call for new cathedrals arose. Church-building funds became a familiar part of medieval life, an endless stream of levies to finance the towering stone monuments that dominated the skyline. These cathedrals, it was often explained, were built to glorify God. Conveniently, they also glorified the bishops who commissioned them and the kings who approved them. The cost of such projects was staggering. Cathedrals required armies of masons, carpenters, and artisans, not to mention the raw stone, timber, and glass. Funding them through voluntary donations would have been hopeless. Instead, peasants were invited to contribute through mandatory collections, special taxes, or increases in existing fees. A villager might not have shoes, but he could certainly help pay for stained glass windows he would never see, positioned high above the altar of a cathedral in a distant city. The irony was unavoidable. Many peasants lived in cottages with dirt floors and leaking roofs, yet their money built cathedrals that soared hundreds of feet into the air. These buildings were marvels of engineering, dazzling in their artistry, and utterly useless to the people financing them. For most peasants, the cathedral was less a house of God than a reminder that even poverty could be taxed. Collectors presented the levy as a noble obligation. Contributing to a cathedral, they said, was a path to spiritual merit, as if peasants could redeem their souls one coin at a time. Refusal was rarely an option. Villagers who hesitated risked accusations of impiety, a dangerous charge in a world where being labelled irreligious could make life even more miserable. And so the coins continued to flow, one small payment at a time, slowly transforming into stone arches, carved saints, and golden altars. Attempts at avoidance were minimal. Unlike livestock or grain, cathedral funds were abstract. There was no way to hide the fact that a collector stood in front of you, demanding payment. Families sometimes offered goods instead of coins, handing over eggs, wool, or even chickens. While such contributions did not speed construction, they could be sold or traded, ensuring that even poultry found its way into the foundations of God's house. The result was that Europe filled with cathedrals, each one financed in part by the labours of peasants who never asked for them. These structures still stand today, admired by tourists who take photographs and then leave, unaware that countless villagers centuries earlier had been forced to sacrifice their dinners so that the windows could glow with coloured light. And if church construction could be funded by peasants, so too could warfare. For the next levy turned not toward heaven, but toward destruction. The siege tax, where villagers paid to finance the very wars that trampled their own fields. War was expensive, and medieval rulers had an uncanny ability to make it more so. Castles had to be supplied, armies had to be fed, and siege engines did not build themselves. To cover these costs, rulers devised the siege tax, a levy that forced peasants to contribute directly to wars they had no interest in fighting and every interest in avoiding. It was, in many ways, the purest expression of medieval logic. If your fields were going to be trampled anyway, you might as well pay for the privilege. The siege tax was often imposed suddenly, announced with little warning when a campaign loomed. Collectors went through villages demanding coin, grain, or labour. In some cases, peasants were required to help construct siege works, hauling timber or digging trenches, only to watch their own contributions used against neighbouring lords who were equally busy taxing their own peasants for the opposite side. Wars became less battles of ideology and more contests of which villages could be squeezed hardest without collapsing. The irony was hard to miss. Peasants paid to fund the very armies that would march across their land, flatten their crops, and occasionally burn their cottages. A villager might hand over a sack of grain one week, only to see the same grain confiscated again by passing soldiers the next. It was double taxation in its most literal form, first by coin, then by boot. Avoidance was rare but not unknown. Some peasants tried hiding supplies, burying sacks of grain or concealing livestock in forests. Unfortunately, armies were thorough in their foraging, and soldiers often had more practice finding hidden food than peasants had hiding it. Others attempted to argue that they were too poor to contribute, but poverty was so widespread that officials treated it less as an excuse and more as the normal condition of taxpayers. The siege tax also revealed the hierarchy of suffering. Wealthier landholders might grumble at the loss of coin, but poorer families sacrificed their very means of survival. Bread grew scarcer, winters harsher, and morale lower. Yet the tax endured because rulers insisted wars could not be fought without it, and peasants lacked the power to resist. For lords, the siege tax was a necessary evil. For peasants, it was simply evil. Still, it funded the machines of war, the towers of timber, and the long grinding campaigns that defined medieval conflict. And when the smoke cleared and the fighting ended, another tax often appeared to finish the job: the mirage tax, designed to build or repair the walls that enclose cities. Walls that, ironically enough, sometimes kept peasants locked inside with the very lords who had just taxed them into misery. When villages weren't funding wars that destroyed their fields, they were often taxed to build the walls that enclosed them. This was the mirage tax, a levy specifically designed to raise money for the construction or repair of defensive walls around towns and cities. On paper, it sounded noble. Fortifications would keep out raiders, bandits, and the occasional ambitious neighbour. In practice, It meant peasants were once again paying for structures that primarily benefited their rulers. Mourage was collected in coin, goods, or labor. Towns demanded contributions from merchants, peasants, and sometimes even travelers passing through. If you sold goods inside the walls, you might pay a fee. If you merely lived nearby, you might also pay. And if you had no involvement whatsoever, you might still find yourself contributing, because logic was rarely a deciding factor in medieval taxation. The walls built with Mourage funds were impressive. Stone ramparts, gatehouses, and towers rose above the landscape, symbols of civic pride and martial strength. For peasants, however, the symbolism was more complicated. The walls were often built not only to keep enemies out, but to keep taxpayers in. Once enclosed, escape from duties and levies became even more difficult. The result was less a fortress of protection and more a carefully designed trap. Avoidance was rare but attempted. Some peasants tried to argue that since they lived outside the walls, they should not be taxed for them. Officials disagreed, noting that walls were for the common good. Others pointed out that walls didn't prevent famine, plague, or lords raising new taxes, which seemed like the real threats. This argument also failed, largely because no tax collector had ever been persuaded by logic. The Mourage tax also had a way of lasting far longer than intended. Once walls were completed, the levy was supposed to end. Instead, it often continued indefinitely under the excuse of maintenance. Stones, after all, had a habit of shifting, and towers occasionally crumbled. Villagers who had already paid once found themselves paying again, and sometimes again after that. In this way, Mourage transformed from a temporary burden into yet another permanent fixture of medieval finance. For rulers, it was a success: strong walls, steady revenue, and a population safely contained. For peasants, it was another entry on the long list of obligations that defined their existence. Protection, like everything else, came with a bill. And yet, even with walls, ovens, chimneys, and heads all firmly taxed, the creativity of medieval rulers still had one more flourish to offer. When every obvious source of revenue had been exhausted, they simply turned to miscellaneous fees, a catch-all category for anything that could not yet be taxed, but soon would be. After ovens, chimneys, windows, doors, livestock, roads, bridges, beards, and even death itself had been taxed, you might think that rulers would finally run out of ideas. Unfortunately, the medieval imagination was boundless when it came to revenue. Whenever a gap appeared in the system, it was quickly filled by a vague category of charges often referred to as miscellaneous fees. These were taxes for everything else: the leftovers, the oddities, the inventions of bored clerks with too much ink and too little restraint. What counted as a miscellaneous fee depended entirely on the creativity of local authorities. In some places, peasants paid for the right to graze their animals on common land. In others, fees were charged for using village wells, despite the water already existing quite happily without human intervention. There were even reports of taxes on candles, a levy that ensured light could be monetized both inside and outside the home. If something could be measured, it could be taxed. And if it couldn't be measured, officials often measured it anyway. Collectors enjoyed enormous freedom in enforcing these rules. A peasant bringing goods to market might be stopped and charged a transport fee, while another might be asked to pay for wear and tear on the Lord's roads. These vague categories made disputes nearly impossible. How do you argue against a fee for general upkeep, especially when the man demanding payment is holding a spear? Avoidance strategies were as diverse as the fees themselves. Some villagers attempted bartering, offering eggs, wool, or a chicken instead of coins, only to discover that collectors were more than happy to accept both. Others tried clever legal arguments, insisting that a particular fee had never been charged in their village before. The response was always the same: it is charged now. Logic rarely prevailed against authority, and miscellaneous fees thrived precisely because they could be invented at will. For peasants, this final layer of taxation was the most exhausting. It reminded them that no matter how careful they were, no matter how diligently they paid, there would always be another charge waiting. Life itself had become an endless invoice, each page filled with entries for things they had once considered free. Wood, water, light, movement, even air filtered through chimneys. For rulers, of course, the system was brilliant. Miscellaneous fees required no justification, no elaborate structure, and no consistency. They were the filler taxes, the ones slipped in quietly when the treasury needed topping up. Over time, they became so normalized that peasants stopped asking what the money was for and simply handed it over. And with that, the catalogue of medieval taxation reached its natural conclusion. From tithes to tallage, from salt to beards, every corner of life had been carefully itemized and charged. Miscellaneous fees were not just the last tax, but the most honest. They admitted openly what all the others implied, that rulers would always find a reason, any reason, to collect. Which leaves us with the inescapable lesson of medieval finance. Nothing was too ordinary to be taxed. If it could be seen, touched, used, or even imagined, it could be turned into revenue. And if peasants thought otherwise, they were swiftly reminded that disagreeing with a tax collector was itself a taxable offense. And so we reach the end of our long, detailed, and thoroughly uninspiring journey through medieval taxation. From tithes to tallage, from hearths to beards, every aspect of life was monetized. Bread, salt, light, warmth, and even death itself came with a bill. Now, if you are somehow still awake after hearing about 30 different ways peasants were charged for existing, then congratulations. You have achieved something most medieval accountants never could, staying conscious through the entire subject of taxation. Truly, that is no small feat. If you are awake, you might even consider leaving a comment below, perhaps sharing which tax you found the most absurd. Was it the oven, the beard, the chimney, or perhaps the poll tax, where simply having a head was enough to incur a fee? Your thoughts, unlike medieval taxes, are free to share. And if you did, understandably, fall asleep somewhere around the salt tax, don't worry. That, after all, was the point.